What's up, team? Okay, so since I was a little bit busier this Sunday, I went around to editing an old class on backtesting stocks and testing in general, and so make sure to hit the subscribe button if you want to see more content like this. This is also only part 1, and we'll be doing a part 2 of a live backtesting session, and so if you have any specific strategies you want to see us backtest live, let us know in the comments below, and enjoy this video. Before we move forward with the rest of this video, if you're interested in using the same platform as us that allows you to day trade stocks once you're approved, and specifically short using the VWAP fade strategy, plus comes with a course, demo account, chat room access, plus more, I'll leave a link in the description, and it's a great way to help support our channel. Today's class is on backtesting methods and examples, just a kind of a review class on backtesting stocks, the benefits. We're going to specifically look at the failure and success levels of the VWAP fade. We're also going to look at my I call it the IO method of backtesting that I use, and then we're probably going to do a little bit of live backtesting, maybe just on 1 or 2 stocks, maybe for a week or so, just so you can see kind of the method I use. It's a much simpler method. I know you can use Excel. I know Excel is probably a lot more efficient with calculating the odds and stuff like that, but I'm not that good at Excel, to be honest, and so I just do it kind of the tally method, which I think is easier, and it's just the method I use, so anybody can use any method they prefer, but that's what we're going over today. Alright, so first thing, so before you get started backtesting, you want to have your prerequisites met, and in that case you want to have a success and failure point determined with your strategy. And something I talked about before, that when you're learning a specific strategy, and when you're getting ready to backtest it, you have to know that that strategy and setup fairly well. You have to know it well enough to establish where you would consider that trade a success and a failure. A lot of times these levels are going to be your risk and reward levels. They're going to be, another word for them would be your stop and take profit levels, where you're going to set your stop loss and where you're going to take profits. But just to keep it simple, we're just going to call it a success and failure level, because that's ultimately what they're going to be when we're actually testing those levels. So like this says, some strategies will use the chart, and others, like the opening range breakout, will use a percentage or a ratio. Like the VWAP fade, the VWAP bounce, the strategies that I like to play, they use the chart to kind of guide me on where I'm going to set my success and failure levels. The opening range breakout uses a 1-to-1 reward target and risk target, and so your risk is going to be the size of that first candle, and your reward target is going to be the equivalent of that, so that 1-to-1 ratio or percentage. And so it all depends on the strategy where your specific success and failure levels are going to be. And like I said, in this specific class, we're going to look at some VWAP fades, just so you can see kind of the process of documenting where the success and failure levels on those specific strategies are ultimately going to be. Okay, so when we look up an actual chart on a VWAP fade, and like I said, we're really backtesting the VWAP fade here, we're looking for where our obvious failure and success rate would be. And this goes back to the previous slide when I said you have to understand where your risk and reward would be on a conventional chart looking at the strategy. And so if we look at this VWAP fade right here, we have to ask ourselves, where would we consider this trade a failure? A lot of the time, again, I'm using my risk or stop out level, and so I'm looking at this chart and I'm saying, where would I stop out of this chart? And I would use this confirmed resistance right here and think, if this stock breaks above that confirmed resistance, a lot of the time it's going to reverse and continue moving up. And so that's a really obvious and self-evident failure level. And when I look at this chart, again with VWAP fades, I'm almost always using that previous low of the day as my reward target. I have a really easy success rate, which is just the previous low of the day. If it reaches that point before the risk or failure level, then we would consider this instance as a success. And so I hope that makes sense, and I hope you can kind of understand why we document these levels and why you should understand the strategy before you really start backtesting on your own. Okay, so before we move forward with chart analysis, let's take a look at the VWAP fade failure or risk level so you can really try to understand what we're going for here. If it's the first fade of the day, a lot of the time I'm using the pre-market levels as my risk or failure level, and if there have been multiple fades, I can use the opening range low or the previous high of the day. And so let's take a look at examples of each of these so you can really understand what I'm talking about. Okay, so before we move forward anymore, I do want to break down what a VWAP fade is here. And so a VWAP fade is essentially when a stock starts to maintain in a downward trend at the open. It maintains below the VWAP in a downward trend, puts in a low right here, and then bounces back to the VWAP. That's ultimately where we're going to enter our short position. This is a short strategy, and then we're going to look for a level above us as our risk or stop out level. And so when we look for this, usually a level that works really well is that opening range low. If we can find some confirmation with those first few 1 minute candles, some convergence with those first few candles, we can have a really easy and obvious risk level for us to use. And that way, if the stock breaks above that level, that's our cue to get out or stop out of our position, and we can give ourselves a much larger reward target. The name of the game with this type of strategy is positive risk reward ratios, or positive reward to risk ratios, I should say. And so when we put in a really tight risk level like this, and we have a really big reward target, again, like I said in the previous slide, we're usually going to use a previous low of the day as our reward target, which would be right here. We have a really tight risk and a really big reward target, giving us a solid reward to risk ratio in the trade. And that all lines up with using that opening range low as our risk level. We're ultimately looking for confirmation, and so when we have that body low here in the low of this candle, as well as some highs here following the rest of the day, then we have a really tight and confirmed risk level for us to use in our back testing. Okay, so the last risk example I want to go over for the VWAP fade is the high of the day as a risk point. To be honest, this is one of the ones that I prefer to use the least, because a lot of the time a stock can break the previous high of the day and really squeeze up, going from red to green. Another reason is that when you use this risk level, it's usually a little bit closer to the open, which just isn't really my style of trading. And in my opinion, the VWAP is an intraday trend indicator. And so the little time you have for the stock to actually pick a trend, the more likely that it's going to squeeze up and less likely it's going to actually confirm that trend, which is all a VWAP fade is. Still, trading is very subjective and preference based, and so this is a level that people like to use, and it can also be a very strong support and resistance level that can be confirmed, and so I understand why some traders use it as well. As with fades, a lot of times before you get in one, there'll already have been a previous fade during that day. What I like to do with these is using prior moves as my risk or failure level. That's what I typically like to do. So I think if I fast forward here, so like this says, if there's already been a fade in the day, you can use the high of that move as your risk or failure level for that second fade. If you're trading a VWAP fade, a lot of times there's already going to be one prior in the day. And so here's an example of that. Not even necessarily a fade, just kind of a bounce already previously in the day. And so what I usually like to do is I like to use the high of that first move right here as my risk level on the second move. And so you can see the high of that first move here. And then I can use that high as my risk level on this second move. And so if I enter the stock here, my risk level's tight. My reward level can be down here for a good risk reward trade. And like this says at the bottom, I love using these levels as risk, and the reason is because as long as the stock stays underneath that first level, it is technically putting in lower highs, which means it's in a bearish trend. Okay, if it breaks that level and it breaks above that previous high of the first move, then the short-term trend starts to look a little bit more bullish than bearish, and that's kind of my signal to get out of the trade. So does that make sense? So like if the stock stays under this, then technically it's still putting in lower highs, and that usually signifies a bearish trend, right? A bearish move. Lower lows are great, lower highs are great for a bearish trend. Once the stock starts to put in higher highs, then that usually starts to signify a short-term trend change, at least to the bullish side, and that's never what you want to be in. And so it makes a lot of sense to use this area as your risk, not even necessarily for VWAP fades, but for any type of downward flag move. It makes a lot of sense to use these areas as your risk or failure rate when you're back testing, because once it actually breaks this level and breaks above this level, then it's technically putting in higher highs, and that usually is going to signify a bullish trend as opposed to a bearish. And so what we want to see is we want to see it hold underneath this level, continuing to put in lower highs, and ultimately continue in a bearish or downward trend. That's what's going to help us with the VWAP fade. So now we can look at the VWAP fade reward level, which is where you're going to take your first profit in these type of trades. And so the reward point with the fade is almost always going to be the previous low of the day. It makes it very easy to test, but it also gives it a pretty good odd of hitting. Considering stocks move in ranges, if you caught the ranges class we did last week, you know many times the stock's at least going to test the previous low of the day before bouncing up. And that makes it a very obvious and self-evident reward point, because if you can take profits there, if it does bounce up, you're still fine. You've taken profits when you needed to, and so if it rebounds and continues up and goes against you, then you can get out for break even or a small winning trade or maybe a small losing trade, but it's not going to turn into a big loss if you take profits at the right point. And so with the VWAP fade, and honestly with a lot of different short strategies, the low of the day is going to be the most obvious level for you to take your first profit. Why is that the most obvious level? Because that is the most obvious reversal point for that strategy. If a stock starts to test the low of the day, that's going to be the most obvious level that it's going to bounce. If it's going to bounce, a lot of times it's going to bounce at that previous low of the day. And so with that said, it makes a lot of sense to take profits there, because if it does bounce, you can take your profits, and then if it rebounds back to your entry, you can get out for the rest break even. But if it actually does break that level, like I said earlier, you can get out for a much bigger winner and ride it down to the next support point. When the stock reaches this, which is the previous low of the day, you can see a downward move. It forms that previous low of the day here before it bounces up to the VWAP. When a stock reaches this level, it's testing the VWAP fade, or in testing the VWAP fade, we're going to consider this level a success. And so if you see this VWAP fade while you're testing it, and you see the stock actually hit this level, even if it bounces back and goes back up, we'll still consider that a success, because that's the success level. If it hits this level before going down here, then we're going to consider that a failure. We basically the equivalent of getting stopped out if it hits this level here. And so when we're testing it, we got to watch this level, which is the failure point, and this level, which is the success point, which is just your risk and reward level. And so if it actually triggers your risk level before hitting down here, then it's a failure. But if it triggers this level before hitting that one, then it's a success. Everybody follow? The next thing, now that we kind of showed you a rundown on kind of how I map out the VWAP fade, at least when I'm getting ready to back test it. That's kind of how I do it. You can do it however you want. I think that's just a more practical way to do it, where you establish a success and failure level, so it makes it really easy to trade. You know, it's either a success and a failure. You can tally that up when looking back on historical charting to really figure out how accurate your setup and strategy has been over a given sample size. Alright, so the next thing we're looking at is the different methods we use. Once you have your success and failure levels determined and understood, understanding them is actually really important. But once you have those two things done, you should then figure out which method of testing or documenting you will use in order to figure out how reliable your strategy is. I tend to prefer the simple IO method, I call it, although you can use any other method you like. There's a lot of different algorithms that you can use to actually test your strategy. So if you're really good at coding, I know you can use certain different algorithms and platforms to backtest your strategies. So I tend to prefer just kind of tallying it up. I call it the IO method. Like this says, that you can use any one you like, but we're going to review that method now. So the IO testing method, it's a method I came up with to test your strategies manually using historical data, and we're going to go over some examples after this. But to do this, you look through historical charting, and for each successful instance you would mark a 1, and for each failure you would mark a 0. And at the end of the sample backtesting period, you would then add up each and calculate the percentages for each. And so does that make sense? So I can show you an example to probably be easier to understand. So this is my results from when I was testing. When did we test the 1 minute range breakout? What was this, in December, guys? We tested this one maybe in December. It may have been November, maybe January. But a while back we tested the 1 minute range breakout gap. We call it the gap and crap is what we call it. Basically a gap fail strategy on AMD using a 1 minute range breakout as our strategy. And so you can see if I put a 1, it means a success, and a 0, it means a fail. And so I basically go back through and look at different charts from, in this case it was AMD, but you can use different sectors that we'll go over later. And anytime it was a success and I noticed this is a successful instance on the chart, I would mark it as a 1. and anytime it did not work, I would mark it as a 0. And then you can effectively tally this up and give yourself an accuracy rate at the very end. You can see in this specific instance, I had a few that where I was back testing the washout long, and then I think this was the VWAP bounce. But in this case with the VWAP bounce, it had 18 successful instances, 6 fails, giving it an accuracy rate of 75%. I also recently back tested the VWAP bounce, and it really hovers right around the same accuracy rate. So I back tested the VWAP bounce in February so far, up until I think the 20th of February. So from the 1st to the 20th of February with about 6 different stocks. And the average accuracy rate for all of them was roughly 71% for the VWAP bounce. And so it's actually been pretty accurate. It's actually been more accurate than the VWAP fade lately, the VWAP bounce. And so, you know, it's actually been pretty accurate this November. But you can also see I did it here with the washout long on AMD, which was super accurate for a while there on AMD. You can see this is from September 15th to January 14th, 2019, and it had an 83% accuracy rate. But when you're doing this, guys, you know, of course you want to see what the accuracy rate for your specific strategy is ultimately going to be, but there's other data that you can gather from doing this. One of the things is the favorable conditions, you know, how common the strategy is. Like you can see my notes after back testing the washout long, where that it's less common, although very high accuracy rate. The risk reward is subjective in these, and so you can either use 1-to-1, 2-to-1, with 2-to-1 being used by setting your risk at the half of the first range. It's more often in volatile markets. You're going to see the washout long, which is just the red to green move, more often in volatile markets, and I'm going to continue back testing in it, which I did. I'll have to pull up the results from that later. But that's ultimately the point of it, is to gather data. You're looking to test your strategy. And, you know, if you've been to the classes before, that's kind of my niche in trading. I'm kind of the analytics guy. I love to kind of analyze different strategies and setups and data. And so, but when you're doing this, like I said before, you're not necessarily just looking for an accuracy rate. You're also looking to find favorable conditions within your strategy. You're looking to find what conditions make your strategy the most likely to succeed. And so again, during your testing session, you should also come out with this as some data. It can show you the right conditions to search for in conjunction with your specific strategy. I think this one was the VWAP bounce. When I tested the VWAP bounce, it showed me that 3 really important things for the VWAP bounce to be successful were volume, large breakouts at the open, and a previous history of bounces. If I found a stock that did all 3 of these things, I'm definitely adding it to my watch list and looking to trade it for VWAP bounces. And, you know, AMD is one of the ones that do it a lot. You know, stocks that fit these 3 conditions are AMD. You know, really AMD MU fits it pretty well. You know, cannabis stocks like CRON, ACB, APHA, CGC, TLRY. And so microchip and cannabis stocks are usually what I test for. Those have been the ones that have had the best results for this specific strategy. But this is why you do this, is because now I know what stocks I want to add to my watch list each day, and I know which stocks these are, what stocks to look for, because I tested it and I saw that they were much more common with these specific sectors and stocks. And so next up here we have stocks and sectors. Next, you want to determine which stocks you'll be watching for your back testing. You know, really, I used to back test and I used to look at my old watch lists. You know, I used to look at my old watch lists, see what was moving, see what had really high volume. But I kind of evolved from that, and now I look at specific sectors. And I kind of, you know, if 2 different sectors work really well for a strategy, I can kind of group them together and test those. But I think testing sectors makes a lot more sense, because you can get a good idea of what that sector is doing and whether it's going to be reliable. And you can test certain stocks as well. But like this says, next you want to determine which stocks you'll be watching for your back testing. Like it says, lately I've been targeting specific sectors, as that will usually keep it pretty targeted and easy to document. For the last back testing session I did on the VWAP fade and bounce, I used the cannabis and microchip sectors, specifically looking at AMD, MU, CRON, ACB, APHA, and CGC. And I got pretty good results for those guys. We'll review those results in a minute. But I got pretty good results for these as well in those sectors. So using your data as a guide, Once you have a targeted accuracy rate from backtesting, you have a goal to shoot for with your actual trading. And this is important. This is another reason why you backtest, is because you can have a reasonable expectation for your strategy now. Once you actually backtest the strategy, now you actually know what your accuracy rate should look like with that strategy. A lot of times, gurus and other people, like, they're selling you on the $1 million strategy. And that's not actually what you want to do, because strategies change. Strategies only typically work for a few months, and then they may stop working for a month or two, and then they may start working again. And so no strategy is the key to making $1 million. The key to making $1 million is just to be able to test any strategy. If you even, like I've always told the class, don't trust what I'm saying. I would love it if you just tested the strategies that I talk about yourself. Don't trust me telling you the VWAP fade is a good strategy. Test it yourself. That way you'll know. Because if you don't test it yourself, you're essentially just trusting what somebody said online. And that's never a smart thing to do. You're going to find a lot of different educators and people on YouTube, and a lot of them teach really valuable stuff. But one thing you always have to do is be skeptical of them and test the strategy for yourself, because strategies change. You might watch a year-old video and think, man, this strategy looks great, but that strategy might not even work anymore. And so the only foolproof method to really test whether a strategy is viable or not is to backtest it and look at it and see exactly, what the data is actually showing you. And you got to be as objective as possible. It's not easy to be objective, but you need to be, because if you're not going to be objective, there's no point in doing it. All right. So to end my rant here, so your goal is to shoot for an actual accuracy rate that you got when you backtested it. So for instance, if your backtesting accuracy rate on a specific strategy was 70%, your goal should be to get as close to that number as possible with your live trades. That is one of the main points of testing, to have a reasonable expectation from your strategy. And something that was really cool that I noticed after I backtested the strategy is that my backtesting accuracy rate and my actual trading accuracy rate matched up fairly well with the VWAP bounce. And so I backtested the VWAP bounce and the VWAP fade for the month of February so far. And I actually think I started trading the VWAP fade and the VWAP bounce starting in February. Mostly, I think I just stuck with the VWAP fade. But what's really cool is that when I compared both of my results, so these are my actual trading results. You can see my trading accuracy in the last 2 weeks has been 66.7%. And my backtested accuracy rate was 65.3%. And so honestly, pretty close, all things considered. I mean, one was 66.7, the other one is 65.3%. And again, this is why you backtest, is because it can give you a reasonable expectation of what you want to achieve with your strategy. In this case, I knew my trading's lining up actually a little bit better than that backtested accuracy rate. Maybe I just got lucky, but this is why you backtest, is because it's going to give you a reasonable expectation from your strategy. Here, we can just real quick, so I can show you some examples. Alright, so with VWAP strategies, like I said, I typically prefer to stick with the cannabis and microchip sector, right? And so we can track one, let's just do CGC. We can just test CGC, or we can test CRON. We can test one of these cannabis plays, maybe AMD. And so what we're essentially looking for here, and this is actually a trade I took on Friday. This is my trade from Friday, actually. If you go watch the stream on Friday, this is the trade I took. So what we're looking for with these VWAP strategies is we're looking for a downward move. There we go. All right, so we're looking for a downward move here. So when the bell rings, we're using a 1-minute chart, and we're looking for a downward move. So we're going to look for the stock to come back down here like this. You can see a downward move right here. And once it makes this downward move, that's when we're starting to look for a potential VWAP fade. We know it's made the first step, which is a downward move. And so we're going to start looking for possible risk areas to give ourselves if it does bounce up to the VWAP. And so once it does bounce up to the VWAP, again, you can use this level here, which I've already drawn out as my risk. So you can see it bounces back to the VWAP here. This is where we're going to enter the trade right here. And again, we have some confirmation in pre-market from this level right here. You see it has its support here, resistance here, a little bit of confirmation there already from pre-market. And so we have that level that we can use as our risk. We can even go back in time, see if it uses it. It does have some resistance there on the previous day. And so we got some confirmation. You can see here, 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 maybe a little bit here as well. And so we have some confirmation in that risk level. And so once we have some confirmation in that risk level, we know we can use that. And so if we use this, what's our risk? Okay, so we're getting in the stock right here at about 22.80. And so from 22.80 up to 22.86, 22.87 is our risk. And so in this case, our risk is about 7 cents. And so if the stock goes against us 7 cents, we're going to get out for a 7-cent per share loss. If we're buying 1,000 shares, that would be a $70 loss. If we were buying 100 shares, that would be a $7 loss. But regardless, this is our risk. Very small, very tight risk. And with the VWAP fade, we're almost always going to use the previous low of the day as our reward target. And so our reward target is going to be down here at the previous low of the day. And so that gives us a risk of what was the 7 cents, 7-cent risk from about 79 really up to 86. So about 7 cents of risk. And then what's our reward target from about 79 down to 62. So what is that, 17 cents? And so our risk is 7 cents and our reward is 17 cents. And so our risk is almost 3 times our reward in this trade. And so, you know, if you caught the class last week, if we bring out a calculator here, we can see how accurate does this strategy need to be in order for this to be a profitable strategy in the long run. And so this is, we'll just round it off to 3 to 1. We'll just round it off to 3 to 1. So you do 3 plus 1 equals 4, and then you're going to do 1 divided by 4. So we only have to be right 25% of the time for this strategy to be profitable in the long run, with a 3 to 1 reward to risk ratio. So if the strategy, or if that specific instance has a 3 to 1 reward to risk ratio, if our reward is 3 times larger than our risk, then we really only have to be right 25% of the time in the long run in order for that strategy to be profitable. And so if I pull out my notes here, here's my notes from back testing the VWAP bounce and the VWAP fade. If we pull this out, again, the accuracy rate on the VWAP fade was 65.3%. That's much higher than, that's much higher than 25%. Yeah, so if we're back testing this, we're essentially just looking for fades. I can really only see one on this particular day. And so if I was back testing it, you can see the fade here never hits the risk. We can pull this up, just do a quick one. We can give it a 1 for a success, move on to the next day. And the goal is to be honest. I don't really see any fades on this day, so we're just going to skip it. I see some bounces. This one, I don't know. I mean, I guess you could consider this a failure maybe, but I'm not quite sure. I mean, it's not a big downward move, so I'll probably just skip it, but that one's so and so. We keep going back, no fades. Keep going back. Here's a fade. And then this is actually a fail. So we have 1 success and 1 failure. Why is this one a failure? Is because if we use the previous high of that flag, like we said, so here's the first one. We can mark that one down as a success. And so we can put that as 1 success. But like I said earlier, we can use the high of that first move as our risk in the second move. And it did push up and stop us out here. And so that's 1 success, 1 failure on this specific day. We tally that with, we got 1 success, 1 failure. So far we have 2 success and 1 fail. And then you just keep going back in time. I don't see any fades really on that day. I don't really see any here either. I mean, this is more of a rejection. I guess you could consider this one a failure. And so just to be safe, I'll go ahead and consider that one a failure. Just to be honest, because we do have a downward move, a pullback to the VWAP, and then if we use that previous move, it would stop us out for sure. So you got to be honest. I see a lot of bounces though, and then we got another fade here, and then a failure here. So again, we have 1 success, 1 failure. I think right now it's about 50%. We also have another one here, another one here. And so this would be, here's a fade, and there's a failure. So we have 2 success,
and then 1 failure. And so that's basically what you do, is you just tally it up. It can be meticulous and time consuming, but overall you're going to get good data from it.